Yo, so what I'm gonna do is break down. I'm gonna break down a bullish trend, bearish trend, and a range. So that I'm able to showcase basically what I'm looking for before determining what levels I want to trade at. And majority of my trades are based off of 4 hour levels. Only because, or for instance, I would go from a 4 hour level and I would drop down to a 30 minute and look for structure because within structure there is structure. So for instance, if if we're looking at the market on actually let me go to a blank let me make it blank real quick. Blank canvas. So if you're looking at the market on a 4 hour, um 4 hour, 30 minute. On a 4 hour, price may look like something like this. 4 hour right here. You may see price going higher high, higher low, higher high. Um, well, let's just say another higher low before the new higher high was created. So you may see this on the 4 hour, and you have identified the trend overall because text, not text, highlight. You may have identified the trend based off of this higher high, this higher low, and this higher high. Now, in order for me to identify what trend the market is in on the 4 hour, I would like to see 3 points being made, which is 1, 2, and 3. Because if you just get to a new higher high and a new higher low, price could come back up to this higher high and make a equal high and then fall down. So you always want to make sure that you have a three-leg extension. So 1, 2, and 3. Now you know you're in trend. Overall, the trend is bullish because it's going up. And what you would simply do once you see this in the market, once you see this new high being created, which also established the 3 points in the market, you will wait for a pullback. And price will more likely come to this area of support and resistance here where price actually broke and created the new higher high from. It will come back and retest that high just to show you that that is an area of strong support and resistance. Now, this same move here on the 4 hour, it may look like something like this on a 30 minute. You might see, let's just say, a double bottom being created, a breakout, a retest, uh, like maybe a low that was higher than that low, some type of break, retest to that area, then a spike up, retest to this level, and price may come, might pull back steep. That's the thing, price could pull back steep. So you this right here on the 4 hour is going to look almost 90% of the time something like this on the 30 minute. And I will also break down what I'm going to do is go over bullish and bearish, and then I'll probably just create another video. I'll throw the range in there too. So I'm going to try to speed this up only because TradingView only give me 20 minutes of recording, and I don't want to make this. I don't want to make it too long because it's really simple. Like I said, when you're looking for a bullish trend on a 4 hour, you'll want to see higher highs, higher lows, higher highs, and then on a 30 minute on the time frame that you're looking to trade, you will want to see more structure being made, showing you that prices um, within your trading zone. So here on the where we at? Right here. Here on the 4 hour, this would be the zone you're looking to trade out of. Here on the 30 minute, as you see, price is in that zone. Once price get into that zone, what you want to see is you want to see a bunch of candles reject this area here. You want to see a bunch of candles reject this area here. and then look for some type of pull out of that zone, whether it be a break and a retest. You could get something like this, a break and a retest. And then your entry will be something like this. You could simply enter once you see that break and retest here. And then you could set your stops. Stops could always be just under this zone. It don't have to be 58 pips exact, because you also want to make sure that your risk to reward is somewhere around 2 to 1, or you're risking 1 to gain 3. So let's just say it's 42 for right now. You want to look to get to like at least right here 55. Let's just make it a 1-on-1. You can aim for a 1-on-1. You risk 55 pips to gain 55 pips. And then let's just say price does pull back a little steep into like your stop loss area, and then it spikes up. And your target should be previous highs. So you'll be looking to target these previous highs up here. Boom. And this pretty much what the market does all day, every day. Like I said, you'll want to see price reject this area. So some type of rejection, price come back, might overlap it, still reject out of it, and then boom. And then you got a lot of confirmations here. So you got price coming to an area of support and resistance, rejecting that area of support and resistance, showing you that overall this is a strong bullish trend. Here on the 30-minute, you also got a shoulder here, a head here, another shoulder. So it's a head and shoulder play being made right here. So that's two confirmations. So you got overall higher highs, higher lows being created. That's one confirmation. You got price coming into this area of support and resistance, rejecting it. That's two confirmations. You got a head and shoulder pattern formation. That's three confirmations. You got a breakout of this zone. That's four confirmations. You got a retest of a higher high being created on your trading time. That's what was that? What did I say? 5 or 6? That'll be six confirmations. And then you're looking to enter the trade and take price to previous highs, which would be seven confirmations. So overall, you would have got seven confirmations just off this market structure here alone, showing you that this buy is more than likely going to play out in your favor due to the higher time frame confirmation and the lower time trading time frame confirmation candle formation. So it literally will be the same thing in the opposite direction, but just so I'm not even gonna try to save myself time and not do it in a bearish market. I'll do the same thing in a bearish market just so you got to understand it. In case somebody new come across this video and not sure what I'm talking about. So in a bearish trend, you will look for lower lows, lower highs, and lower lows. This is a lower low. This would be a lower high. This would be the new lower low because it's lower than this low. And that also will give you a three-legged extension, point 1, 2, and 3. Next thing you'll be waiting for is for price to pull back into this area of lower low. Also creating a new high, lower high, to then reject this area and create the new lower low to continue the trend. And then here on the 30-minute, you may see something like this. You may see price come down, pull back, break out, retest, pull it down just a little bit, double top, break, shoulder, pull, head, pull, shoulder, trend continuation. So when it comes to this area right here, where you looking to get into a trade at, because you want to wait for price to pull back so you can get in a trade at a discounted price. So as you see, if you take the Fibonacci tool and you come from this lower high to this lower low, the pullback will be here at the 50%, and you'll be looking to get 50% off on price to get in and take it to its new lower low. And that's what the Fibonacci tool is actually used for. It's used to get price discounted. So This same line right here will be right here on the lower time frame. And what would you be looking for? Some type of candle formation, whether it be a shoulder, a head, a shoulder, boom, or it could simply be a top, a breakdown. Let's just say this last move didn't happen, and it was just because we used the head and shoulder for the last one. So let's just say it was just a simple. Let me get rid of this one. A double top. So if you see a double top in the selling market, more than likely price is going to make its way down because price came here, rejected it, came back up to retest, and then rejection. So you'll be looking to get in on this market short right after this the second head of the double top is being created. Get in somewhere around here, setting your stops just above the previous shoulder right here, and then take price down. Let's just say we took it from right here. You would have got a 2-to-1, a nice 2-to-1. Boom. And as you see, price would have gave you that 2-to-1. And that's basically a bearish market. So you're just looking for lower lows and lower highs to be made on the higher time frame, and then look for some type of candle formation to show you that the trend is going to continue on a lower time frame, such as 30-minute, which is the time frame that I'm most of my trades are taking on. Now in the ranging market, it's quite different. What you will see in a ranging market is price just moving sideways. Now the trick to a range is no matter where the range began at, what you want to be clear is that if it's a bullish market, if it's coming off a bullish run, right? You got your new higher high being made. Your new, let's just say it pull a little steeper back, a gap over the actual range bound. We got a new higher low. Then price makes its way back up to here, equal high, equal low, equal high, equal low. The minute you start seeing, you might not see a new high or equal high being made, but if the minute you start seeing new higher lows being made, new higher lows, be expecting, because I see this all the time. You will see, and I actually got a perfect example of this on gold. But you will see price within this range, and then you will start seeing these lows that was equal lows start to become higher lows. Even though there's no new higher high being created, but these higher lows are forming the momentum for the new higher low to be created, which was this new higher low, and then price created a new higher high. This new higher high, and then price created a new higher low. So you got to be cautious of this type of move within this area. But as long as price is doing this, is creating equal highs and equal lows, simply on a 30-minute. Just keep in mind one or two things. You always want to sell the tops and buy the bottoms. So whenever price comes to the top of that market. So let's just say that I don't want to do too much drawing, but let's just say you seen that, and then you was at this bottom. You want to buy the bottom. So you got a double top break retest. Your entry will simply be here for a long. Boom. You can set your stops. You can set your stops right here up under these 2 points, and you can look to target these highs. Boom. And then once price gets up to that area, you'll want to look for some type of selling confirmation, whether it be a head and shoulder, boom, rejection. As soon as you see the rejection, you can either wait for one or two things. You can wait for price to break below these 2 points of the head and shoulder, the neckline of the head and shoulder, come back and retest it and get in on the retest and set you a sale right there, a short, boom, make your stops right above that last shoulder that was made, and take price to the bottom. Boom. Now, the thing about the markets is you want to be as patient as possible, because once we get to this point right here, where you start seeing price made its way back here, and then let's just say you was at the bottom, so you know that you want to buy it, but let's just say price just starts showing you more of the overall trend. The minute price breaks this area where it was equal highs being made, boom, and it breaks above it, that's when you know that it got to pull back. Don't just get in because you see a break above it, because a lot of times it could break above it and make its way right back down. So you want to be cautious with that. You want to wait for it to break it, and you want to see some type of rejection at that area of support and resistance before you look to buy it and take it to its new higher high. And it'll be the same thing for a bearish market. Like I said, I only get 20 minutes with TradingView to record, and I'm at 16, so I don't want to spend too much more time on drawing things. I want to actually hit the live charts and show examples of these exact movements, whether it be bullish and bearish for right now, and I hold off on the range to the next video. I can actually do the range first. So remember when I said price could overlap it, and you could be thinking, oh, it's a new higher high, let me trade it. No, you don't want to trade just because you see it overlap, because what happened right after overlap? Price sunk low. This is not even a high or a low. I wouldn't call this anything. This is just a bunch of noise within the market. But then you're seeing price came and retested this area of support and resistance, also making an equal low, also a double top. Double bottom. So you got double bottom, one confirmation. Um, you got a higher time frame area of support and resistance. That's two confirmations. You got rejection at this area. That's three confirmations. You got a break and a retest. So because price is right here, it broke it and it came back and retested right here. It retested this area here. So that's four confirmations. So you could have simply got in, took price to these highs, boom, got out. It came to this, boom, sold off, got out, bounced around. But then here go the higher lows I was talking about that will be being made within a range, higher low, higher low, higher low, breakout, retest. See how I retested it? When it came here to retest it, it broke below it. But once it came here to retest it again, you had one counter rejection, two counter rejection, three counter rejection, four counter rejections. So you had ultimately four counters rejecting this area of support and resistance, letting you know that this is a strong bullish hold for an uptrend. And then you could have just got in, boom, set your stops below here and trailed your stop loss. And it was Friday, so you wanted to get out the market a little early, somewhere around, like, let's just say at the latest noon. Could have got out at this noon candle here, boom, and took in your profits. Now, it'll be the same thing for a bearish market. And then as you see here, this was another range. Price was just within this range too. But go over the three-legged extension. And these was trades that I took that's shown right here. Three-legged extension. You got 1, 2, 3. Now you know that price is in trend. Next thing you want to do is see a pullback. You got your pullback. You want to then use your Fibonacci tool to see where you can get price off. You've seen a bunch of rejection. Price came to this 38.2. Another rejection. You could have got in right after this candle right here that I'm sitting here on. You could have entered right here. Boom. Next candle, the stop loss would have been the previous, whatever the previous percentage was. So the 23.6 could have been your stops, and you could have looked to target this 61.8. Boom, and as you see, got in. Would have had no drawdown, 21 pips for 107 pip gain. Perfect execution. So yeah, when you're looking for a trend, you just want to have a three-legged extension in the direction that you're looking to trade in. Drop to a lower time frame and enter.